now we just got down to the nitty gritty. We were talking about what happened on Friday when silver was down 6%. And Andy actually just was going to say,
I was saying it really, I found it, I don't want to say disconcerting or annoying, because it's not, but it shocked me how freaked out people got. A market that had defied gravity for so long, outpacing everyone's expectations. And let's put things in perspective. It fell by $120 or whatever. That's 3%, 4%. Gold.
And silver is down 6.
Whatever. It's a big move, but the underlying demand at the highest level, you guys, look what it's doing today. Right back up. They can't keep it down. This is what is different. There are people buying. Remember I think I said on the last podcast, you have Jeffrey Gundlach, the bond king, saying 25% allocation to gold is not overweight. This is a man who's made his money selling bonds. He's the bond king. Now, what financial advisor would ever say 25%? Michael Hartnett, for Bank of America.
Jeffries.
Well, Michael Hartnett of Bank of America, his newsletter is probably 10 grand a year. He speaks to the institutionals. He's saying 25% gold, 25% bond, 25% short-term treasury, 25% stock, 25% gold. Jeffries is saying 6,600. They used to be a primary distributor for all the major mints. They know gold. And then you look at Goldman Sachs that is saying $5,000 gold if the Fed loses independence. Well, Stephen Mirren is at the Fed. He was Trump's analyst and the architect of the Mar-a-Lago. There is no independence.
And BofA up their silver target to 65.
65 and 56 on average. What do they really think? They keep changing it and moving it higher. You can't be tripped out by a move like we saw. But I will tell you what is uniquely different. On top of 39% lease rates in London, you got to cover a position. Yeah, it's only 39%. Or 19% borrowing fee for SLV. Really, 19%. Or record deliveries in Comex, or record shortages on the LBMA, or lines all over the place in Singapore, or outages at the biggest refineries in India, or massive outages in retail silver in China. I don't care what you look at. The Chinese flying all over the world buying doré and concentrate. If you don't see the bigger picture right now, you're missing what is a generational opportunity, but it will not go straight linear higher, because you have some of the world's biggest banks on the planet who are massively short, who are now getting margin called and can't borrow the silver unless they want to pony up 39 or 19%. SLV, which is so stupid and is run by JP Morgan and BlackRock, you can naked short it. So in order to get those shares back that you shorted, to buy them back, you're going to pay a massive fee. No one wants to sell them or to borrow them to you. Anyways, the bottom line is that what we saw Friday, the demand has overwhelmed it again. And that's what's different. In years past, the neck would have been broken and we never would have seen these numbers again. And here we are today, and it's right back almost exactly where we were on Friday.
Not only that, but just from a technical perspective, it is only healthy to have a pullback like this. Nothing goes straight up. Nothing goes straight up.
But you know what? How about this one? The managed money, and I'll give Bob Coleman credit on this. He does have good info. Doesn't like me very much, but he has good info. And he said that the managed money is short notionally $1 billion of silver. And when the managed money is short, guess who takes the other side of that? Well, that's right. It's the commercial banks. They're the ones who know the playbook. They're the ones who finance everything. So if the commercial banks go long and the managed money is nearly record short, how do you think this ends up in the next few weeks? It's called squeeze. It's called margin calls. It's called, if I had a gun to my head, silver goes much higher very soon here as that managed money position starts to unwind. It's going to happen. The bullish technicals on every metric, from just flat out technical analysis to the distortions on all the delivery mechanisms, the LBMA, all of the things that China and the BRICS are doing, and Saudi Arabia and Russia and India, and now the U.S. calling it a critical mineral, and gold. I mean, gold is going to back the system. It's going to back a common trade settlement system in the BRICS nations. It's going to back the treasury market, I believe, and Judy Shelton certainly does keep saying it here. Things are changing, and the prices are going to go higher. Get used to volatility. $100 is only 3%.
That's it. And now, as I always tell Andy, you know, $1 when silver was 20 was 5%. Now $1 is 2.5%. And what would be the first thing that comes to your mind if I said India?
Silver.
Really?
Mhm.
Wow.
Why?
Because you know most people would say gold, but for you, you say silver.
Yeah, they've been buying more silver than anyone in the world for the past 6 or 7 years.
And there was a very, very interesting article that I read over the weekend that basically was talking about, of course, the shortage of silver in London, but they said that it was being driven by the insane demand in India.
The largest refinery in India for the first time ever has run out of silver.
And basically they were saying that this issue within India is revealing a lot of structural problems that is indicative of the much
Here's the
larger market.
structural problem. When you create a system that is based upon rehypothecated paper contracts that aren't real, and everyone is willing to stand for delivery, you got no problem. But if one big bank fails to deliver, the systemic contagion is off the charts, because these banks aren't just bullion banks. They're commercial banks that have their fingers in every pie across the globe. And then it starts to erode confidence like that, which begets more selling, which begets more fear, more panic, more craziness. And when you talk about the potential for some sort of a delivery distortion on the LBMA, it's real. They have 140 million ounces of free float, of which they're trading 600 million ounces a day. There's 2 billion contracts, 2 billion ounces in contracts that are out there that could stand for delivery against 140 million ounces. Now, what could possibly go wrong?
What could possibly go? Well, as a matter of fact, I was listening to one of your very good friends, Bix, on one of his podcasts, and he said, the LBMA isn't the problem. The LBMA is not the problem. It's the Comex and all the bullshit contracts. That's the problem. So interesting. I'm sure that you've listened to it, heard it. Just so that you know, we have a hard stop tonight at 6:30 because we have to go to that dinner.
Yep.
So let's get to the questions.
But just so you know, when you short a contract on Comex, most of these banks will go long in London.
Correct.
And so all this delivery coming back, is it the commercial banks covering their positions? Is it the Treasury Department under the Exchange Stabilization Fund? Who is bringing in all this metal? Is it China working with JP Morgan? Who knows? Right? We don't know. And it's very interesting. And I watched from Eric Young did a really cool thing about, it's on X. I think everyone should watch. It's a 5-minute video about the Rockefellers and Fort Knox. And there was a whistleblower during the Reagan administration who basically said that this needs to be looked into. Reagan created a commission and went it went all the way up to the Senate, and came back and they said that, yeah, we don't have the metal that we supposedly have. The whistleblower was one of the Rockefellers' personal assistants who basically mysteriously fell out of her 10-story apartment building.
Jeez.
And he just published this yesterday. Eric Young, King Kong on X. Check it out. It's fascinating.
I love that. Krusty Whitebread said, y'all need to take an ounce of gold and invest in sound. I tried to charge Andy a gold coin.
Normally we do this. I'm sorry. Normally we would do it with a microphone. We kind
in the
of
studio.
Yeah. Today was kind of a messed up day. Apologize for the poor sound. Let's bring this closer.
Yeah. Today was a little rough because also Jana, who is usually the one kind of helping flow through all the comments for the questions. So now we have to do that on our own. So just bear with us a little bit. Little patience today helps a little bit so I can get through to the questions so that we can do what we're here to do. All right. Krusty Whitebread also called us clowns. Wonderful. Yeah. OC Stacker said, this is what happens when my vest is on too tight. It's true. It's true. I was trying to wear a life vest when we were in Aruba, but unfortunately that didn't work out too well. Here we go. Echo Leaf, is silver a better investment than gold at the moment?
Yeah, it is. They're both going to go high, but the distortion in the ratio between the two, geologically, historically, it makes it a better buy, I think.
Yeah, we did some actually today I did some swaps from gold to silver with, of course, the anticipation down the road of doing another swap from silver to gold.
Well, remember, so, yeah, when you make that swap, it is a taxable event.
Absolutely. Here we go. Bamboo Lover. By the way, love the name. Have a question. If you had the opportunity to purchase with limited money an old timers, silver collection, Morgan's, Mercury's, Eagles, junk, what would you go for first?
Those are the 4 items that I like as much as anything in the world. So
Anything that you would think is
I love
better
the
than the others?
Morgans and the Eagles would be my favorite.
Yeah.
I mean, the Morgans are, you give someone a Morgan silver dollar from the late 1800s and they're like a kid on Christmas. They'll be like, oh my God, that's so cool. Yeah, that was $1 back when your great grandparents were walking around. And it's really, really, there's something mystical and special about the Morgan silver dollars. They are my favorite.
Okay. Smith Hers says, my dealer says gold will crap out at 4,800. I don't know what your dealer has, unless, you know, the batteries on my crystal
Tell
ball.
your dealer to come on the show. Let's talk, and I'll be nice.
Yeah.
I think you're going to see it go markedly higher than 4,800. But hey, you know, that's the beauty of different opinions. You listen, you evaluate, and then you make your own decision.
You know what we say in New York about opinions.
Everyone's got one.
No, we say something
I
else.
know.
Yeah.
Just
I don't
like-
know if we can say it.
You
on
say
there.
opinions are like what?
You say opinions like assholes. Some are bigger than others.
And everyone's got one.
And everyone's got one. Yeah. All right. Well, Diego says, it's a cute picture of Diego. Yeah. Question for Andy Tattoo. Is Glint a good and secure way to diversify some of your silver holdings rather than having 100% physical custody yourself?
Yeah, why not?
Yeah. I mean, look, it's a good way. It's not. So, I mean, we always say, just like with Bitcoin, if you don't hold the keys, you don't hold your coins. It's a great way. I always like to think of it as a great alternative to having money in a checking account that you can spend.
It's unallocated.
Yeah.
I mean, it's not segregated. It's allocated. So it's not in. It is there. You have title to it, but it's not like storing bars in one of our BRICS facilities or coins that have a specific association with you. I think that you should have physical silver in your own possession. I think you should have maybe physical silver at a BRICS facility, maybe arguably before you have it with Glint. But Glint is a great way to have it without dealing with the storage issues. But it's, you know, I think that the segregation and having the other bases covered first arguably would be the order of doing things. You know, the one thing it democratizes owning metal because you can spend $5 on it if you want. So that's one thing that I do like about it a lot.
GG4GB said goldbacks are awesome. They pay me better than a savings account. I'm not quite sure I understand that.
I don't understand it either. And I
have
no problem with goldbacks. I like the owner. I wrestle with the fact that what do you do with them if the institutions won't take them? Who do you sell them to? There's 1 or 2 companies that buy. Maybe I'm naive and I'm not going to speak poorly about him at all because the guy's straight up honest guy. I know him. Lives right over here.
Yeah, well, there's a few different companies that, of course, make
the main guy that
yeah.
makes them.
Yeah,
and he's a good guy. And look, when they passed this law about like making legal tender coins, I think it'll end up being like they're doing in Texas. I could see where they would say, you bring your American Eagle gold coins to the Texas Bullion Depository, we're going to give you an app or a credit card where you can spend it. And states a lot of them are specifically saying American Eagle coins. So I don't have a beef at all against the gold back, but I'm not not familiar enough to comment on how you're getting a better return on it than other things.
Yeah. And Smither says, I have a feeling we're headed to 40 silver again. Banks will not allow sound money, your owners. You know, Smithers, I would love in the comment section for you to tell me why you think 40 silver will be back again. I happen to think that there's a much greater chance of seeing 60, 65 before we see 40.
And the U.S. government just reclassified it as a critical mineral. They've just put a floor under the price. The biggest traders in the United States are bringing it in hand over fist. The countries around the globe are draining the exchanges.